Gene, there are a lot of folks here that are finding some bargains out there in a lot of those big cap names where we were obsessing about their high valuations just a few weeks ago. Well, you got to draw down in those valuations. Are you brave enough, though, to buy into that dip?
I think if you have a perspective of more than 3 months, you should be brave enough to buy into that dip. And I kind of put the context of this. There's the mega caps, and then there's other tech, emerging tech, and I think that both of them will ultimately finish the year higher. So I'm in the camp that this is a pullback. It's so easy for me to get wrapped into the negative headlines and I think lose sight of what ultimately is going on here. And what's going on is that the fundamentals of these companies, whether it's the mega cap or other companies that are powering AI, are better than ever. Even the companies that sell off on their quarters generally have strengthening fundamentals. And we see this disconnect for the first time. And so the reason why I point that out, the disconnect between what the fundamentals are doing and what the stocks are doing, is it begs a question to are you a buyer on this pullback? Are you a believer in what the innovation phase looks like for the next 1, 2, 3 years? And if you do believe that AI is going to have a meaningful change on our lives and these companies are going to benefit and that benefit will accrue to companies outside of tech, then you're in the camp that this is going to go higher. So just to kind of put it all together here, is I still think we are going to be in a bull market this year. I think that ultimately we still have another 2, 3 good years left of this AI trade. I do believe it will end in a spectacular bursting of a bubble, but I do not think we're seeing the bursting of the bubble today.
Well, on that journey there, though, Gene, and I hear what you're saying about AI spend. And I'm just going to cherry pick a company, admittedly cherry picking here, with Apple, because obviously they have the potential upside exposure from everything that's going on in AI tech. They're also a company that struggled to articulate an AI plan, if you will. They're also a company that, at least amongst the Mag 7, is probably much more exposed to a global trade war, if that is indeed what we're in and where we're going to be for the next couple of years.
So I've studied Apple for a long time, and right now there are 4 forces. You outline those forces. There are 4 forces in play that are pressuring the stock. 3 of those forces: weakness in China. They've dealt with tariffs 7 years ago. There's talk about this softening Apple Watch demand. 3 of those forces are things that they've navigated in the past, and they have pulled through that. And I think the one piece that they have not navigated the significance of what's going on with their Apple Intelligence initiatives. And I am first to say that I thought this was going to have a bigger impact this year, and just the substance of the product hasn't played out. So this is, I think, where investors should really focus their attention on Apple is where are they really in terms of getting these AI features out the door? And of course, they just delayed that for a year recently around the Siri, but that's indicative of what's going on with their broader AI initiatives. And so I think at the end of the day is that these headwinds that we're seeing around artificial intelligence is the central question. And surprisingly, I believe that Apple actually has more time to figure this out than many investors are giving the company that room. And the reason is that consumers who have Apple products have a high retention rate, and they're not going to quickly switch to a Samsung phone, for example. If there's an impressive AI feature over there, they're going to probably give Apple some time to figure that out. So I think they probably have a couple years to figure this out. Not good for the stock in the near term, but ultimately they've made a misstep here. They're going to figure it out, and I think that it's going to ultimately result in some upside to the iPhone numbers this year and next year.
Gene, one of the other stocks sort of not in that AI hyperscaler world in the Mag 7, of course, is Tesla, moving on many different things, whether that's sales in China, whether that's Europe, whether that's sales in the U.S., whether it's pricing, whether it's the White House, and whether it's Elon Musk literally being in the White House. How do you handle Tesla?
So I own shares personally. I think this is probably the best position company when it comes to physical AI, which is this next chapter. Jensen talks about the chapter of physical AI coming in starting in a few years. I think Tesla's in a great place with that. But to answer your question is that the near term, I'm bracing for numbers to come down materially, and I'm surprised to see the stock rally in the last few days. I think that the important date is related to April 2nd, when we see the deliveries. That's when we're going to get a real sense in terms of how what's going on with Doge has impacted Tesla sales.
Yeah.
And so in general, when numbers come down, usually the stocks go down. I do expect that once numbers get reset, stock sells off, but I think it does climb back. Still a believer that this company has a unique advantage into this physical AI world, and I think they're going to capitalize that in 27, 28.
Gene, but how much do you think of movement in the stock is just due to headlines from Elon Musk and the White House? It has nothing to do with actual Tesla sales. And how does that sort of distort then what we're looking at?
I think what's going on with the stock right now is a shift from the general playbook with investing in Tesla over the last 10 years. There's two chapters to it. One is about momentum, and the second is about fundamentals. And typically when the focus has been on fundamentals, that has had things have been delayed. Maybe margins aren't what people would hope it'd been, and that has been the shift in the stock. That down 38% that you mentioned. It's a move from momentum stock after the election to investors thinking more about the fundamentals. So to answer your question is, I don't think I think the headlines play into this in the sense that it is impacting how investors are thinking about deliveries this year. And in that sense, I think that the fundamentals, again, I think deliveries could be down 5%. And this year, I think most analysts are looking for about 10% growth right now. So I think this is more around the substance to what's going on the demand side.
We only have about 45 seconds, Gene, but is there anything else in the tech space that you like right now?
Well, you mentioned NVIDIA and that being up a little bit, but I just wanted to point one piece out. Jensen had some surprising, shocking, hard to believe commentary about the need for compute on their last earnings call to go up by 100 to 1,000,000 times as we move to more reasoning models. And I'll just say that the work that we've done, we also have a venture business. I think that it really points to that. I don't know if it's going to go up 1,000,000 times, but I think we can build a strong case that it will go up by 1,000 times. NVIDIA is in a great place to capitalize on that. I think that they will comfortably beat the numbers over the next couple of years.